Welcome to the Daily Update Podcast, where I'll go over the action in the market for Tuesday, November 11th, and see how things look for Wednesday, November 12th. Going over Tuesday's market action, the S&P 500 closed up 0.21%, just shy of the 6850 level. There was a lower open, choppy price action around the daily pivot at 6815, and a modest afternoon push above the unchanged level, though volume remained light due to the Veterans Day holiday and the bond market being closed. The Dow set a new all-time high, up 1.18%. The Nasdaq, by contrast, finished flat to down 0.3%. Megacap and semiconductor names underperformed, with one notable exception. Apple was up 2.2% on reports of a nearing U.S.-India trade deal, with India being a major manufacturer of iPhones. What about the broader market tone? It still remains defensive. Value outperformed growth. Small and mid caps were mixed but held up better than large cap growth. Sector leadership included healthcare, energy, staples, and real estate, all defensive areas, while tech and materials lagged. Discretionary was up 0.25%. Looking at the key news and context, on Capitol Hill, the Senate passed a short-term funding bill extending government operations to January 30th. The House is expected to vote on Wednesday. Weekend rumors of a deal helped lift sentiment. This has been seen as a tailwind for stocks. Major airlines are warning of lingering flight delays tied to the recent shutdown. Thanksgiving travel could face disruptions. There is a backlog of delayed economic reports that remain in limbo. Revisions are pending, and when the data resumes, there might be an increase in volatility as this mess gets worked out. As far as the technicals and breadth, the trend remains positive across all time frames, but is still not trending in the short and intermediate term. Momentum is mixed, but leaning constructive. Breadth is improving. The advanced decline line, McClellan oscillator, and percentage of stocks above key moving averages are all turning positive. Sentiment on the daily side remains negative, but broader gauges remain extremely optimistic. The VIX remains below 20 and continues to fall. The put-call ratios are rising, likely due to an increase in hedging activity. The gamma profile is positive at 6,800 and key support sits at 6763. We're also keeping an eye on the Hindenburg Omen, which was initially set in October, but we're seeing follow-through spikes. There was no new spike on Tuesday, but there is a series of spikes that bear watching and bear respect. Looking at growth versus value, in the short term, things are not looking very positive. The short-term ratios sit below their moving averages, confirming this defensive rotation, but it's not necessarily a risk-off stance. All three smart money indicators are positive. Risk appetite is neutral, equity allocations are high, with a clear defensive tilt. Economic data on Tuesday included the NFIB Small Business Optimism Index, which came in at 98.2, slightly below the 98.3 expected and down from the 98.8 in the previous reading. Labor quality remains the top concern. There's also a continuation of announced corporate buybacks, which is strongly supportive of the market. As far as general earnings, 2026 consensus growth is rising across the S&P, equal weight, mid, and small cap segments. Valuations still remain elevated, with the Shiller-Cape ratio sitting at very elevated levels. Critics may call it overvalue, but the bulls counter that with AI being just in the early stages of growth. Looking ahead to Wednesday, November 12th, the bias is neutral to positive. The S&P short-term structure is improving, but still not trending. Megacap participation remains critical. The only economic report will be the weekly MBA Mortgage Applications Index. Seasonality continues to favor November, with year-to-date gains above 15% producing a bias that's more positive going into the end of the year. The risks include a continuation of delayed economic data, any geopolitical flare-ups, and the potential travel chaos that may develop. Levels to watch for the S&P include the 6815 daily pivot, 6800, and if we drop, the 6763 gamma flip level. In conclusion, defensive rotation persists amid light volume and optimism over a shutdown resolution. Broader market breadth is improving, but growth and mega caps need to see consistent outperformance. The S&P is in a non-trending environment in the short and intermediate term, but still remains long-term positive. Thank you very much, and I will talk to you in the next podcast.